Hello. I feel like it's been a while. I mean, it's obviously been a while, but I feel like it's been longer. How's it going? I hope you guys are doing well. I miss you guys. I miss the class. But anyway, welcome to Mr. C's Accounting. I had a brilliant, industry-shattering idea illustrated by this picture. Where what if you didn't actually have accountants do any work, they just hired student interns to do all the accounting for them, and it was mind-blowing. Anyway, I find accounting gets a bad rep. It's an extraordinarily practical skill to have. Managing money, knowing how companies manage their money, knowing how to manage your own money, and being able to do your own taxes and all this stuff instead of paying an accountant a lot of money to do it. And accounting's a great career. It's great job security, good salary, lots of bonuses. Accounting's a great field. But anyway, all that being said, let's get into it. So, what accountants do? They record, analyze, and interpret financial or economic activities of a business. So basically, they keep track of things. But it doesn't end there. That's just where it starts. Accountants are responsible for the control and flow of information of a company. And their job is to manage that flow of information and present it to decision makers so that they can make the best decisions possible. That makes sense? And their job has a very highly important role to play in the decisions that businesses make. So some basic questions that I guess I'll go through them one by one. So, how much money did we make last year? Obviously, really important for businesses to know. How much can we afford to spend on a new store addition? How much can we afford to pay our employees? That's a hot topic right now. How much can we afford to come up with a new product? Have we broken even? You guys remember that? Oh, that's a video for my accounting class. Have we broken even? How can we reduce our expenses to increase profit? Is it wise for us to merge with another business? How much will any or all of this cost? Can we afford, what I didn't write here, but right now companies are asking, can we even afford to bring our employees back after losing so much money? If we do, what changes would be made? And a lot of companies had to ask the question, can we afford to stay open during COVID-19? And a lot of them came to the decision that no, we can't. So, before going broke, they closed down so they don't lose their homes and stuff like that. But all of these decisions, and these are fairly basic decisions, but all decisions in business are usually made under the influence or affected by information that accountants provide. Because while the goal of your business may not be to make as much money as possible, the reality is that businesses operate with money flow as if it was blood flowing through a body. Businesses need money to function, just like human bodies need blood to function. So, transactions. Recorded activities of business that involve money, so most activities. When something of value is exchanged, and businesses can conduct thousands of these a day. Now, there's a lot of software and things that make it so that you, as an accountant, wouldn't have to record thousands of things every day. But this illustrates one of the reasons why accounting is so important, because tiny things with dollar values that happen thousands of times a day can have a huge impact on the community, on business, on society, on everything. And so it's really important to keep track of all that. Net worth is something that you've probably searched about celebrities. Celebrity net worth. Some of them are just mind-boggling. And so the net worth is equal to the value of everything you own after all debts are paid. Two big terms that you'll see a lot in accounting are assets and liabilities. Generally speaking, assets is something that has value that's owned by a person or a company. So for example, if you own a bicycle, this is one of your assets. Now, in accounting, an asset is something that will provide future cash flow of some kind, or it enables the company to make money. So for example, if you're running your business out of this little house, then the way that this house provides value is it's a container for your business. Essentially, it's an office space. It's a place for you to interact with your customers. It's a place for you to store all your files and documents. A space provides a lot of value for businesses. And what a lot of people do who own small businesses that run them out of their house is they will write off a certain portion of their taxes as a result of having to use some of this space. Like, let's say they use this room right here for their business. Now, that's getting on the more technical side of things, and we probably talk about this in grade 11, which I think I'm teaching next year, actually. So yeah, if you want a fun accounting class, come take Mr. C's accounting. I'm pretty sure I'm teaching it next winter, or sorry, next spring. But yeah, it's neat stuff when you run a small business out of your house. You can get some really great tax breaks. But anyway, I digress. Now, liabilities are debts or amounts owed to others. So a classic example is credit card debt. If you buy something that you can't afford, then you basically have an IOU to someone else saying that you'll pay them back when you can. And there are usually conditions attached to that. But for example, if you owe your parents $100 towards your iPhone or something, or if you need to pay your phone bill, and you don't have the money right now, especially because for a while now students haven't been able to work. So if you've lost your job, then you could still get your phone plan, but you might owe your parents the money for it. Okay, so net worth is equal to assets minus liabilities. There's another term for this, which is owner's equity, which is also equal to assets minus liabilities. And we're going to talk about that in a little bit, but that is the famous accounting equation. So for example, Ashley has calculated total assets to be $1,400. If she has debts of only $300, then her personal equity or net worth would be what? $1,100. So, owner's equity it can be thought of as a lot of things. One of the things is owner's investment in the business. The financial portion of the business that belongs to the owners or shareholders in the case of a corporation. Remember that? This right here is the accounting equation. Hugely important. Most of accounting actually revolves around this equation. If you were to think of it as a web, this would be at the very center. And yeah, that's why we spend some time on this, is because this is a very important equation. Assets minus liabilities equals owner's equity. Okay, so in terms of actually keeping records of this stuff, bookkeeping, pretty straightforward term, is the recording of all transactions. By law, all companies are required to keep records of all the transactions they're involved with. Also, it's just a really good thing to do because, no one can keep all of that stuff in their head, you know what I mean? And you guys probably have done some bookkeeping or in one form or another. Even if you're keeping your receipts, or if you're, you look at you guys probably don't have credit cards yet. You might. I have no idea. But with credit cards, at the end of every month, you get a statement saying what you've purchased with your credit card. And it also says what you owe the credit card company. And so you might keep a record of that document just to track how much you're spending. It's not a bad idea, especially with credit cards. It's very easy to spend more money than you planned with a credit card. So keeping track of that is a really good way to save some money. But each transaction involves two changes in book values, always. Now, the options of that are one increase and one decrease, two decreases or two increases. I'll explain what I mean, don't worry. For example, if a business pays $100 for labor, I'm just putting something down. So a business pays $100 for labor. There'll be a decrease in the cash balance because we've paid $100, so we've lost $100. So our assets and cash have decreased by $100, and an increase in expenses, labor cost. And so this represents the complete transaction as far as accounting bookkeeping goes. This is where our introduction ends. We're going to continue talking about this in the next video, so definitely tune into that. But yeah, that's it. That's the intro to accounting. I will see you in the next video, and hopefully I haven't lost you. But yeah, I'll see you there. All right, bye.